All right, welcome everyone. Glad you're here. It's Friday, April 4th, 2025. We got some fun stuff going on in the world and in the markets. Less fun for many, but fun for some. So we're going to talk about how to trade through a bear market and be ready for the recovery. All right, I'm going to turn this off just to focus on the content. All right. So today, I do find it important and valuable that you've invested your time with me, and I want you to have something to take away and know that you can use, and you are not reliant or dependent on anything from me in the future, that you will get a return on just the time spent together. So I'm going to give you the rules for the strategy that would have had this equity curve, these returns from 2005 to, well, when I did the study, it was the end of last year, but I did an update study and the performance continued on in a very similar fashion year to date. So this is a study or strategy, very simple strategy that I began using over 10 years ago, and has actually done better since then. One of the assets in there didn't even exist when I started. Not that it didn't exist, but it did not exist in a tradable way that I was using as an ETF. So I'll tell you all the details, absolutely nothing held back. You would be able to model this, trade it yourself, whatever you want to do with it, but it'll be great. So the key here, why I like this strategy for today's discussion, is that this has been through 2008, the 2010 flash crash, the August summer 2011 bear market, a couple other bear markets in there that I don't highlight, but the COVID crash, and the technical recession, which was in 2022. And I have to use these arrows and point them out because, as you notice from the data, they don't really appear to be there. And this is, by the way, a long only strategy. We're only buying the assets in this group of trades. And the reason for this being so valuable is we are facing a definitely past correction territory and potentially into bear market territory. So I want for you to today be able to declare your own liberation day, and that is your liberation and freedom from fear of corrections, bear markets, and extended crashes, whatever they're caused by this time or any time in the future, that you would no longer have to fear the bear. And I love the picture in the background of the man just kind of basically hugging a bear. Okay. So very important, very valuable. So here's what we're going to talk about. We're going to do a quick look, current conditions, the market, and it's not really just like conditions. It's like a behind the curtains or behind the scenes look. And it's a strategy I like to use to really see where what's moving, why. Maybe the answer why isn't really there, but what's moving, what inside of that industry or sector is moving the most, in which direction, where's the strength, where's the weakness, and we can find opportunities to add to our list to trade. Reasons traders struggle through regime change, which is what we have gone through in the recent couple months. We've gone through a regime where we had a bullish secular cycle, and now we are facing correction, potentially true bearish regime. And two simple strategies to improve risk versus return. So it's your risk-adjusted return now and over the long term. It's not just for this current market cycle. It's for the future market cycles, just like the equity curve I showed you has navigated through many, many bearish cycles and caught the upside after that. And we'll do an overview and Q&A about joining the ATC to automate some of your trading. That's at the end. I'll make a very clear transition from you've been given everything about this strategy and what I have to talk about today. And then if you're interested in working together, that will be at the end of this. So a little behind the scenes, I like to do something called a top-down sector and component analysis. So it's the sector ETFs, a very specific radar screen that I custom built. and then the in some of the individual components, and I actually need to go update it and add some more to those, but we'll see them. And the measurements I use are percent off of the high, and that high is the 200-day high, not the all-time high, and the percent off the low, and also the 200-day low. And then I combine these two things to kind of get a score of absolute strength and weakness. And there's a reason for it. The very short version, which I could detail later, is, some things could be 10% off their high, and that's significant. Some things can be 10% off their high, and it's like you can't even see it. You got to squint to see the dip because it has moved so much, and the range is so massive. So there's the reason why we measure off the low and off the high, and why that works. And then strongest to this is what we're looking for. We look for the strongest of the strong, strongest of the weak, weakest of the strong, and weakest of the weak. Okay, I'm going to go back and explain those very, very quickly. Strongest of the strong is a strong sector and the strong names inside that sector. And those are potential explosion plays where you say, wow, this is what's really moving. So over the past couple of years, that's been technology and graphic processing units and anything Bitcoin, crypto related, etc. And you could find the strong names in the strong sectors, and then use them. I automate them from that point, and you can have big upside trades, and then you can control the risk through the automated risk controls. Strongest of the week are potentially recovery leaders. So if you find a weak sector, what sector is being beat down really hard, and then you find the individual names inside that sector which are not participating as much in weakness, those are the ones that can rise the furthest and fastest on a recovery play. So it's a contrarian way of looking for strength inside of weakness. And then you got the weakest of the strong. So if you find a strong sector and you find a stock that's really just struggling to participate on the upside along with all the other names in the sector, well, that could be your potential correction leader, and you can do trades on those on the downside, or just don't buy them. And then the weakest of the week, that is probably the riskiest of them all, but those are in the potential crash territory. And those are very risky, especially to own, but also they're very risky to short, because there's potential they're already overdone and could bounce pretty hard against you. So you'd be very careful and probably use options. So let's pull up my little custom built situation here. So I have on here, let me see if I can scroll over and read this. And I'm sure it's small to you. And I could have done this ahead of time, but let me see if I can just increase the font size real quick. I'm in the wrong spot. I don't want to click around too much. So you'll just be able to see, and I'll show you what's going on here. So this is my little radar thing I built, and this is the percent off the high, right now just shown as a decimal, and this is the percent off the low. And then this is just the two scores added together, because off the high is a negative, off the low is a positive. And then, so if you're really far off the high and right at the low, that'll be a significant high number. So if I have the score, and I'm going to do it in top-down fashion. So presently, even though it's, it's showing some weakness, but it's not like the rest of the markets, the gold miners, and no surprise there, has the highest score because it's 10% off the high, but 27% off the 200-day low. XLU is next, and that's just a defensive low beta situation. Staples, similar concept. It's just low beta, less susceptible to like risk off moves. Financials starting to participate pretty strong on the downside, but it's less bearish than other sectors. Real estate's pretty bad. Discretionary obviously is going to get bad, or is bad, expected to be underperforming due to the fact that anything being imported that's going to have higher prices, since it's discretionary, they may not buy as many. This healthcare, I believe. Yeah, healthcare is down. So I'm just skip down to the bottom and show you the worst, which is Homebuilders. And you can see how the scoring quickly, like, well, I don't have to go analyze the charts. If I just do the scoring, you can see that it's driven way past the 200-day high, and it's is it at the low. It's only 4% off the low, which very well could just be today's action, or that the 200-day low is somewhere over here. So that one's more significant. XLK is the second worst. And that's a lot of that's correction oriented. And this is where if you start looking at home builders, technology, and oil producers, then what you can, or not produce, I guess, exploration, technically it's called, you can start looking for the strongest of the week. And it doesn't mean like, oh, buy it now. It means you can add it to your list and watch for your opportunities in your setups, either through automation or anything else you use as far as proven patterns. These are just the indices. So actually, the futures market, they don't really measure very accurately, so you'd want to use ETF. Let's see if it's the same on that one. It's about the same. Very low score there. What I find very interesting is Bitcoin has a pretty high score. So when you're looking at all markets like this and you can just give it a value and you can sort it and align everything on an objective basis, it really gives you good context. So GBTC, Bitcoin ETF, is hanging up really good. It doesn't mean it's going to turn down or up or whatever. I just know that it's very solid, and I'm definitely leaving it on my long trading systems, even though I'm 85% flat compared to what I could be in Bitcoin. And that's that. So what we're doing here real quick as the example is if we're looking through, so I'm going to look at like staples. And so then I go down to my staples list and then look for the best consumer staples score. And that's currently Philip Morris, CVS, and Altria. Okay, sure, Altria. Go Altria. Good for you. So these are doing all right. So they're, staples are always low beta. So it's not like, oh, wow, if the market turns up, we could really do well on this because, I mean, after this massive bull market, I mean, it hasn't added much. So these are going to be pretty low return no matter what happens on that side. I'm going to jump over to XLK. And then I like to go down and look for the strongest of the week. All right, so if you call AT&T a technology company, more of almost a utility company, but it's in the technology sector. Obviously, it's participating strongly on the downside here, but this could make it on your list for as the world sells off their assets and is going to cash, people aren't taking their money out of AT&T as fast. Very simple story to that. So it could be that it will retain its strength and could pick up from there. IBM's not so bad. Cisco Systems and Verizon. Microsoft is just it's solidly negative. The score is actually turned negative. It's at the 200-day low. So I just say like these are just all very bad and the reason for them, but there's a couple of interesting ones in there. Possibly Microsoft being not so far off the high. IBM really being the only technology name on here that seems to be proving its strength. And you could add a lot more. Seriously, like I think I made this a list originally like 5 or 6 years ago, maybe longer. So we could add a lot more to the tech names. So that's just an approach I use. There's other ways to do it in ATC. I can show you if you're in the community. I can give you this indicator and you can load it on your platform and you'll be able to do that too and add other names to it and go from there. So that's a little behind the curtains look. And what the takeaway from there is going through and as you look for strength inside of weak sectors or weak names inside of weak sectors right now, because there's not a lot of strength anywhere. But where you can find those kind of shaking off what others are experiencing, that can be opportunities for your next trades. So regime change struggles. So like why do traders kind of like almost in hindsight, so a 20% correction or really a 20% bear market comes and goes. Maybe it goes as far as 30% or more, and then it recovers and moves on. And, it's like in hindsight, be like, how did I miss that? How did I not take my risk off? Why was I buying stuff, when we were only down 5 or 10% when it made it down more and I kept getting stopped out? Why didn't I try to short the rallies inside the bear trend? So one of the reasons why traders struggle with that and see it in hindsight, and then they forget again, and then 2 or 3 years later, it happens again, is that it's the recency bias that our mind gets stuck on recent patterns. So we've just seen for a length of time, definitely a strong 6 months, but really, more often than not for years, that every dip gets bought. And so you just see the pattern emerge of, okay, a little dip, the consolidation, then we can buy that. And you can almost do it blindly, and you start to think less about the downside, and you just start to look at every dip as something that's going to go back up. And we ignore how dips function and how rallies function in bearish trends. And so those obviously the dips turn into extended dips, the rallies never catch all the way back up, and then it rolls back over. So ignoring or not knowing warning signals that have worked in the past. And so I'll start with ignoring. So let's assume that you already know of long-term filters, long-term indicators, signals in VIX or backwardation or inverted yield curves. Okay, all of these different things that you've heard about, and they get thrown in a headline. It gets tossed out there. You can keep track of it, but you kind of keep sticking with the pattern that's been working, because these are early signals that, when you're in the bear market, you're already down 20%. So it's too late to be worrying about that. So, or not knowing means you just haven't really studied them, or you've dismissed the fact that there can be signals and filters that have worked in the past many, many times. So either way, you just say, well, this time is different, or those things are just hindsight and can't be useful in the future. But ignoring or not knowing them is to your detriment. And then another is fear of missing the turn. So every time, like earlier today, the market rallies back up, and you look at the candle, so the candle, late morning, a couple hours into the session, is starting to look like maybe a hammer type of signal, hammer formation. It's really looking like, oh, wow, it looks like people are buying here. And then an hour and a half later, it's back down to the lows of the day. And so this fear of missing the turn has people grabbing long trades, again, thinking about just the old patterns and forgetting what is possible in a true bear market scenario. And so they're buying and getting stopped out, and buying and getting stopped out, instead of changing to the new regime. And then another is not adjusting size to match increase in real volatility. So there are pretty simple, target volatility is a method, or adjusting your size based on ATRs or standard deviations, anything like that. These are ways that you can adjust your size appropriately. Also, for options traders, if you use delta-based strike selection, not just points, but deltas, that automatically forces you on an implied volatility basis to widen your spread, and therefore probably take fewer contracts. And that is a size decrease, a deleveraging scenario. So deltas force you to do that. If you say, I'm going to sell a 30 delta and buy a 10 delta. In a very low volatility environment, that could be a narrow spread. And if you say my max risk is X, well, maybe that's 10 contracts. Well, in a high volatility environment, 30 and 10 delta might be much farther apart. And then you look at your max risk, even though you get more credit, your max risk still increase. Well, all of a sudden you can only do 6. Well, now you're controlling 600 shares at the short strike instead of 1,000. So that's very effective for deleveraging your size. And so knowing techniques like that. So from here, because I want to get into the strategy. So if you have questions about these ethereal concepts, I'm happy to answer them, but I'm just a big fan of like getting you straight to like the tear sheet and the rules and the system and the stats and all that, so you can take it away. So stages of bear market mastery that I've observed are the Stoic investor. So the idea is like, how do you survive and possibly thrive through a bear market? And here's a couple like progressive steps you can take. So the hands-off investor, who is the Stoic investor, not a trader, um, think Buffett, but he's more active than he would say in writing, and he believes in diversification more than he says on the stage, because those are the things he actually does. He sells things and buys things. He trades options. He has lots and lots of stocks. So what he does versus what he says is not quite the same. But he is the Stoic investor. So he knows the risk. He thinks in decades, and ultimately just might buy more during the drop. Otherwise, I'll just sit back and do what I know how to do. So that's one way to master bear markets. Just ride it out stoically, don't overreact, and get yourself in trouble. Then there's what I call the active investor, which is kind of like it's a trader. Okay, if you're being active, you're trading, you're buying and selling as part of your strategy. But I call it an active investor because it might be long only. So long only trading. And then you can be, in this scenario, you sell after valid warning signals and you buy again after the dust settles. So your goal is to capture most of the upside, most, maybe all of the upside, and avoid most of the downside. And that's significant. So a fraction of the risk for a majority of the reward. That would be the goal of an active investor. Very common scenario you see in money management world, that where you're moving around a lot of money, and the idea is just to time or use signals and systems and stats and patterns when you're going to own. Then there's the active trader, and the way they master and survive and thrive through bear markets that I have seen very successfully is to shorten time frames and trade long and short. So that is, you can see it why it's called stages or like levels, because shortening a time frame and trading short is a totally different skill set than being a stoic investor. You have to pay more attention, you have to have learned more things, and you have to have a different demeanor and attitude and set of skills, okay? So that's why it's stages. So today, in the strategy I'm going to show you, I would classify it as an active investor strategy. AJ is fantastic at guiding you through downside short-term opportunities and navigating just about any type of market cycle. If you want a repeatable system that you can turn on and run for decades to come, and do it in a way that's simple and easy to understand and doesn't require those additional skill sets, then that's where this strategy can fit in. And even if you are an active trader and very proficient at it, adding these other things in is a way to easily diversify and add additional winning trades to your life. All right. So this strategy I showed you earlier, I call it a Magenta active trading strategy. And I'm not very good at naming things, but this name's kind of fun because Magenta, if you see the spectrum here, so think of green. You know, when we think of green, green is that traditionally bullish color, right? We have green candles, green arrows, green tickers. You know, when the upticks, it's green. When your P&L is positive, it's green, etc. Okay, so if green is traditionally bullish, and you look at the color spectrum, well, the actual opposite of green is not red. Okay, but red is what we call bearish, and so magenta is really the true complement of green. And if you know, like sports teams or you know, I don't know, decorating maybe, or just like packaging for products, stuff like that. It's very common to see like opposite colors put together. So if you think like you probably know of sports teams with yellow and blue or orange and blue, right? Because those are complementary, they're opposite. So the only reason it's called magenta is because it's my way of thinking of like, this is really like a complement, not an opposite. It's the complement to bullishness. Pure bullishness would be just buy and hold. Magenta is the complement to it of, As I put in writing here, Magenta strategies are bull strategies with bearish respect. So it's like I hold a very strong opinion about the fact that an early signal can mean the market's going to drop, and I don't want to be in, but I will sell, not short. And in addition to that, I'm going to take a couple of long trades that some may call bearish trades. So that's what we're talking about. So warning as I disclose these rules to you on how it works. First of all, there's disclaimers, no promises, etc. But here's the big warning. This is so simple, you may not believe it could ever actually work. All right. So if you're one who like me, has thought like, oh, you need like really complex stuff, and it's got to be stuff most people can't understand or follow for it to be somewhat reliable or, a true edge in the markets. Or like once everyone figures it out, it's not going to work anymore. That only works. That's only a valid concern for short-term arbitrage. Super high probability, good risk reward, very short-term arbitrage with thin margins. Yes, those are the kind of things that other people can, if too many big institutions figure it out, it's not going to work anymore. But this is an investment, an active investment approach. Okay. So this is the Magenta strategy. It's an hourly on Qs, gold, bonds, and Bitcoin. All right. So I'm going to reveal each one. You don't have to write them down. When all the bullet points are on, you can take a screenshot or you can write them down, whatever helps you in this. I think maybe I'll even send the slides out afterward. But at whatever point, this is where you're going to grab the rules. All right. So these are the assets traded in this approach. The one and only indicator and signal is a 200-hour simple moving average. I told you it would be really simple. And you buy above, sell below. Okay. Hourly is kind of the key here. Hourly is a little more sensitive. I mean, it's going to be far more active than waiting for a 200-day. Also, in 200-day, you can have massive, massive pullbacks before that triggers if you've been in a strong bull market, where 200 hours is going to be able to get you out before the rest of the world is noticing things are getting bad. In this scenario, I sized it to 85% Qs and 5% in each of the rest. Okay, so the rest are just uncorrelated, low correlation, uncorrelated. And you got gold, which is like the anti-dollar. You got bonds, which is like the anti-equities. I don't know if anti is right. The low correlation to, or the complement to. And then Bitcoin, which is like, the complement to all of them, which is like, I don't believe in gold or bonds or anything else. Not really. I don't know what the opinion in there, but it's just a good growth asset that, it could go up 10x from now. And I have a confident way to trade it where I don't think I'm going to be on the downside. So here's some of the stats and graphs and things like that to kind of give you a picture of it. So hypothetical growth of 10,000. Now this chart is both like exciting and boring at the same time because it just kind of like fits in the middle. The lower gray line, even though they both look kind of black, the lower gray line is the S&P 500 over that time. The dark line at the top is the Qs. Magenta is the portfolio mix trading. And ultimately you just see like, oh, it ends up somewhere in the middle. But it's not really, because if we redo the y-axis, so this is log scale. And so log scale still represents compounding, but what it does is it exponentially increases these increments. So 10 goes to 20, 20 goes to 40, 40 goes to 80, 80 goes to 160. So now it looks like a straight line uncompounded. And now you can really see why it looks attractive. So here is the Great Recession that took all the way till here to make a new high in Qs, all the way till here to make a new high in SPY, SPX, whatever, S&P 500. But what did Magenta do? It just kept on marching along, right? And yes, Qs overtook eventually, but it tracks pretty close. And look how narrow, look how close it is further on. I know on a full dollar basis, compounded, Qs like spreads out farther, but look at this drawdown in Qs where you really just kind of barely drift down in the trading. And that's what we're looking for, because this can turn into a much steeper decline like back here. but up here it does turn back up. But here, just like that, like, yeah, we get a little decline, but ultimately we skip that recession crash. I'm going to pull that into crash territory, down 60, 70, 80%. I don't know which ones are which, but down a lot. And then just keeps marching along. So that smoothness and consistency we all desire, right? And then here's just a zoom in on drawdowns only. And you can see the drawdowns in Magenta are under control, always significantly less than, it's hard to say less when it's negative, but you know what I mean, less negative than the indexes. There are times it's important to see, like there's times it's down when the others aren't down that much, but it's always that under control. And when these start really tanking, Magenta doesn't participate as much on the downside. And again, this is through last month, it looks like, is the last time I updated this, but it's right on track. It keeps doing it. So even though, as I've proven to you, this is so simple, most traders lack the focus and discipline to follow the rules for years on end. Like I said, this hourly signals. There's not a signal every hour, but it calculates every hour, and it may have to trade every hour. Not every hour, any given hour it could happen. So you got 4 assets, and by the way, you can add more. Generally, adding more adds more complexity, but can smooth the returns even further. You can be very selective. Instead of just doing the NASDAQ 100, you can grab the 10 or 15 or 20 that you truly believe have more upside and are game changers out there and have an even better performing portfolio. But ultimately, it's very, very hard to keep doing this over and over and over and over again, and stick with it when sometimes you get stopped out or not. You take an exit and then it gets back in, then you take an exit and get back in. The next time the exit comes, you're like, I'm really getting tired. It just keeps going back up. I'm just going to leave it. And then that's the time it goes down. So it's difficult for most to do that unless you automate the process. So that's what I want to share with you and talk about now. So I'm not going to talk about the training immediately. I'm going to talk about automation. And then in a second, we'll talk about how do I just do this? There we go. Present. There we go. Automation. So because I have a bunch of screenshots here from like exact examples of systems that are very good and effective, and I wanted to show like why it would be difficult to trade it manually and then how we do it with automation. So automation and systems, it's systems, not automation. Systems, meaning rules-based reasons to buy and sell, are hard to follow manually. And here's why. Sometimes this will be your experience, okay? So just for making sure we understand what's happening, we have a buy signal here and a sell signal here. If there's a red dotted line between the buy and sell, that means we lost money because we bought higher than we sold. And the same thing here. So what do we have? This is GBTC. We bought after a big spike because that was the system. And then it stopped out. And then you bought, you sold for loss, bought, sold for loss, bought, sold for loss, bought, sold for loss, bought, sold for loss. And you say, Andrew, this is what you want to teach me how to do? Kinda. This isn't what I want to teach you. I want to teach you to not have to deal with that. These are hourly bars, so it's very quick, very short. Just happens to be, I went and hunted out one of the worst, most annoying times you would ever trade something like this manually. And out of 100 traders, I would doubt 5 of them would be left standing after that experience. Be like, this is the dumbest thing I've ever seen in my life. I'm not going to do this anymore. So like I'm buying all the way up here after the move, and then I'm buying after that move. And like, what am I doing? What's the point of this? Well, here's why. What we just looked at is in this box here. And then what happens? The next buy signal is a pretty good win. And the next buy signal takes you from 18 to 22. And then there's another win, a little loss after that. So these two, and I had the stats before and I didn't keep them in this slide deck. But these 2 trades, in fact, like this trade, I think made back most of that. And this trade just like dwarfs any of the whipsaw loss from before. So very, very powerful. Oh, and then what happens? It just keeps on going. So ultimately it's going from 18 to 34, and you have a series of great trades, navigating the market. and then you're off to the races. Okay. But having to go through that first manually is why it's so very difficult to keep going, keep going, keep going. And imagine that times 5 stocks, 10, 50 stocks, and then a period of time where you get whipsawed around. Now, ideally, you have other strategies like income options trades, positive theta, etc., where, sideways choppy markets are to your benefit. But either way, taking these trades manually is going to get difficult. So the goal of a strategy like this one is to capture most of the upside, like I told you about the other one, and avoid most of the downside. So a fraction of the downside, the fraction of a drawdown for a majority of the upside. We're not going to get all the upside when we're trading like this, but we'll get a lot. Now, Bitcoin has had a lot of downside. So this is a really zoomed out look at, you can see a strategy. Now, this one is the RSI Plus, which is included in the ATC, by the way. I wanted to mention that real quick. So the RSI Plus is flat all the way from here to here with one little trade kind of hiding behind it there. But it was long. I think that was this 35. That might even be slightly after that period. So off to the left of the screen might be the period I just showed you before, but I'm not sure exactly. But here's a 50% decline where you are mostly flat. And then what happens? You're buying up here. You're flat through this correction. Whoa, look at that trade. Big win there. So we're taking that all the way up. Out. We're just out and flat and just smiling as people are like, what's going on, Bitcoin? I don't understand. I'm losing all my money. And you're just out. You say, yeah, I've been doing fine with it, but I've been flat for a while. That's your storyline. And then here we're actually, even though it's like staying sideways, you can see a couple wins in here in this scenario because it actually moves enough. And then ultimately when it drops through the floor, you're out again, right? So it's very, very powerful. Now, what's the sum total of this since 2015 through end of last year? This is the equity curve of that, and $10,000 per trade, no reinvestment, is a 400% return just because Bitcoin's so crazy. But I want you to say like, yes, that's awesome. I want to participate in that. Even if you automate it, you're still going to have periods like this where you're like, oh, it stopped working. And then boom, nope, just kidding, it's working. Oh, it stopped working. Nope, it's working. Oh, it's really stopped working. No, it's working. Okay. So that's what's going on there. And if you happen to, just for fun, hypothetically, compound, which is not recommended, because if you aggressively compound and reinvest gains, then a period of whipsaw loss can give back way more than if you had straight lined or used like Kelly Criterion or something like that for a more appropriate. But just for fun, reinvested profits, $10,000 in 2015 today would be close to $1 million. So that's fun. Just for fun, though. So yeah, RSI Plus is the strategy. In the Automated Trading Collective, you get the click-by-click instructions to set it up and trade on full autopilot. Any trader with any level of competence in markets, brokerage accounts, and like, opening a computer and using a mouse can get that done in about 15 days or less. Part-time, like an hour a day. If you get stuck at any point, I'll jump on Zoom and show you how to get it done. All right. So what about downside? Because mostly what we're talking about is bull trades. And you say, like, I really want to do bear trades too. Well, the 3 things I like to do for the downside are, first, close your long positions when it's time to close them. If the system wants to be flat, let it be flat. Don't jump in. Don't say, well, I'm going to ignore the signal, or I'm just going to, yeah, I'll let it close, but I'm going to buy a few shares too. Just let it close the system. UVXY long on trade systems. So I had a signal recently in UVXY that, obviously it's done very well. And so that's one I like to take also. Bear options trades, and you can either do those all the time or only signaled. And that's one I've shared before, which is the call credit spread 0 DTE, which is automated. And that one we actually will cover in the group mentoring. So ultimately, the top 4 things automated trading does for you, it frees you to think bigger, because when you move from being the player, the person like taking the actual trades and following the charts and clicking through the watch list on these additional things, you become more of like the head coach or the owner of the team. And so you have all of these strategies and all of these stocks being used on your behalf, and you don't have to actually be on the field, like taking the trades, making the plays happen. So you get to let the systems run and observe them from the sidelines or in the booth, rather than being on the field. Number two, it enables extensive diversification. Really, any number of symbol strategies and timeframes simultaneously, rather whatever your current capacity is. If you get to 10 symbols and you just like lose track of what's going on, or you can get to 20 symbols, whatever that is, you can multiply that by 10 or 100 and have all those timeframes, hourly, half hour, 15-minute if you want, minute bars on certain options trades. All these things. You can be in dozens of different names. You can just see a headline about a stock, read the fundamentals, say, I really think this could be a huge biotech opportunity over the next 10 years. And then you don't have to think about it anymore. You just set up the system and say, yeah, if this thing's going the right direction or this algorithm kicks in, I want it to buy it. And otherwise, I want to be out. And that can just run. You don't have to scan through it every day on your watch list. Third, very valuable for me initially was it creates emotional distance. So you become arm's length from each trade. Before, even if I was following a system, if I like put on a trade and then a couple of days later I'm taking it off for a loss, like I took it personally. Maybe some of you it resonates with you. Like you're just like it's like a reflection on you. Like look, you're not good at this. But when it happens on your behalf, you see a loss happen, but for some reason, because your arm's length to it, it's like you're just seeing it as part of a process more so than trying to like see if like make it reflect on you personally. Also, automation is not like the antithesis or like you have to switch from discretionary to automation. In fact, automation enforces and teaches discipline and skill in your manual trading. And in this, I actually went off topic for what the slide says, so I'll go back to what the slide says. The default, when you have an automated system, is that the rules are followed. That's the default. The default is the if-then scenario is in play, trade is, the order is placed. The default for humans trading is to forget to check, so no trade happens, or to look at everything and then hesitate or change your mind or second guess at every point, like second guess whether or not you even want to check the market, second guess whether or not you want to check that stock, rethink the whole idea of the strategy. Look to the left and see, well, did the last trade work? And then if it didn't, you are second guessing whether you should take the next trade, even though it has no validity to any of the statistics. So the automation is default. The system happens, whether or not you're there. I said 4, but lately I've had 2 more. And that's the one I was alluding to a minute ago. Following systems helps train discretionary skills. It's like training wheels, like putting training wheels back on your bike and like regaining your balance and confidence as you watch how it should work. And then you can take them back off and keep going. Or, just let them keep going as you also trade discretionary. And then another bonus is the automated record keeping and reports. So every symbol strategy combination that you run has its own full set of statistics and records, categorized, ready to go. So you don't have to like try to go through a trade blotter or your account statement and say, well, why did I take that trade again? Or having to like journal all that. That's all automatically collected and saved for you. So now, if you would like, I want to tell you about the Automated Trading Collective, which is live on stickytrades.com. Just tell you a little bit about what's in it, what to expect from it, what's required, etc. Go from there and then take any questions that come up. I just see a bunch of, oh, good. Q&As are coming in. Yeah, so the chat's not on. That's pretty weird. Let's see. Did I miss anything else? Yeah, I was looking at chats. Okay, look, voice low. Hopefully that wasn't a problem. Okay. Oh, RS, I'll answer all the questions in a minute. But now we know, I don't know why the chat's not on, so we'll fix that in the future. It's not like an option for me to mess with. Panelists can chat with everyone. So maybe chats are working now. Attendees can chat with everyone. All right, chat might be on now. So Q&A or chat, I'll read them both. You can type those in now. I'll tell you about ATC. So what is it? Everything you need to start and scale your automated trading portfolio. including the following. So there's a series of things included, and they're in the order that I made it in the order where you didn't feel like you were stuck in theory for a very long time before you got to do anything. I've taken a lot of training like that, where it's like I feel like it was 3 months of theory, and then it's finally like, all right, you're off on your own. Go figure out how to do it. And you're like, what? So I have taken a different approach, and I want you to have like trades up and running very, very fast. They could be simulated. It could be one share. Um, but I just want you to get the thing working so you know what's possible very fast. So the first section of it is called the Automated Trading Fast Start. And that's step by step, click by click, exactly what you need to do. You don't need to study every option in the software, all these different things. It's like the fast track. If you've ever been to Disney, or I think a lot of other theme parks, most of them these days have these like fast lanes and lightning lanes and everything now. And so like I'm not going without that. Like that's just like transforms the whole experience of like you don't have to take the long route to the ride. Like you can just take the fast track onto the ride. All right, then number two, once you know like how to get it up and running, you can use starting point strategies, which are the simplified, ready-to-use systems for immediate use, small accounts or simulations, and they're a great foundation to build your portfolio. So that Magenta is, I call it the SMA Plus strategy. Then you're just choosing which assets to add it to. So you get that one. You get RSI Plus, RSI Minus, and a couple other things as well. And those are a really, really good, easy to understand, copy, paste, and then just choose which assets you want to run it on, whether you want to do hourly or daily, and you can simulate or get going. Number three is symbol selection. So it took me too many years to realize that I was trading I wasn't trading the best symbols for the things I knew how to do. And so I'd be trading ETFs and like popular stocks and things like that. And then I didn't realize like just because I've never heard of the stock before, if it's doing these things and it's priced above $20 and, it's got good volume and et cetera, like if there are the other characteristics there and nobody's talking about it, like that doesn't matter. And those are the ones that have just produced the highest risk adjusted returns. And then you get to be the one trading them before anyone else talks about them. So it's just the process to go through that and not wait for other people to tell you that something's okay to trade. The winning mindset for automated trading. So it's psychology, tools, and strategies, because you do have to make a mental shift. And I alluded to one earlier about like you go from being the player to being the coach or the team owner. And so it's more like tools and also like how to look at drawdowns, how to prepare yourself for whipsaw, and just like really taking good expectations so you don't self-sabotage even with automated trading. Optimization best practices. So I do like to optimize, but I don't overfit things. I guess that's an opinion, objective or subjectively speaking. So it's avoiding overfitting and identifying false positives to increase your expected chance of a strategy working out on the chosen assets. Management routine checklists. So it's daily, weekly, monthly things that you can do to keep your systems running. And the actual list you get is called the 5-minute checklist. And so it's like the very short thing you do every day just to make sure everything's working the way it should, that there aren't any issues for you to take care of, and then move on. And 95% of the time, there's nothing to worry about, nothing that needs to be done. How to build custom indicators like the one I showed you in the radar screen. So you can say like, I really wonder like which stocks are farthest off the high. And you're like, how do I find that out? Maybe you could use ChatGPT, but it's amazing how often that just comes back with like nonsense, like just absolute false information. So you're like triple checking anyway. So you might as well just go to the source and get it. So you can do custom indicators and alerts. So you can do alerts that come to your phone, email, SMS, your watch, whatever. You can set up all these different things. So I'll get you in the right direction there. So you can have custom indicators either for discretionary trading or just knowing, hey, there's something I need to look at here. Multi-platform. So we start with TradeStation, but you can use a lot of other platforms. So we're going to talk about other platforms. And small accounts, there's, you know, just a few issues with accounts under 25,000 to consider as far as like, why are you trading with less than 25,000? If that's all you have, that's is one approach. If it's you're just getting started, so you want to start small, like what are you trying to do? Are you trying to model something where you get funding? Well, you need to treat this totally different. So it's just different ways to handle small accounts based on the reason you are using a small account. You know, it can be a small account because it's an IRA or it's a children's account or anything like that. Like there's so many reasons why a small account would be traded differently than another small account. So we talk a little bit about that. All hypothetical, not investment advice, because it's not personalized. Capital management tips. So how to scale your results by leveraging external funds from either family, friends, prop firms, separately managed accounts, or hedge funds. I've traded for all of those, and it's very fun and rewarding to kind of go from, I think this could work, to like people want to give you money because it's working. So it's just kind of like how to prepare yourself to be able to step into that world. And then the automated trader group mentoring, which is an optional thing. And this is going to be our weekly meetings to troubleshoot issues, enhance your skills, get fresh ideas, and then answer all your questions. And I'm going to bring in guests. So people like software developers, funded traders, systems people. So bring them in, let them talk as well. And, you know, also we're going to be looking for these opportunities like the symbol selection, scanning through, finding opportunities. You know, people share what they've been studying, what indicators they like, and we see how they could work best or how it could be combined with another one. So that's a lot of fun. And then automated trader collab. So this is, you get to meet and work with the other traders, get support, ideas, encouragement, and then ultimately, like if you want to test an idea and you need help with that, or you want feedback on it, or you just want to see what other people are working on, then it's very valuable as well. So in the vision for the future outside of this, what I would like to take ATC and kind of make it the foundation of is I want to fund automated traders anywhere in the world, regardless of how much capital they currently are able to access. I want them to have access to capital. I do believe that, you know, people with not a lot of capital often take more risk than they should because they're just trying to make it worth their time or just get ahead. And sometimes if you just have more capital with good economics and oversight and like risk controls, that you can actually do better and also be in a better psychological space. So I just enjoy that. It creates immense diversification. It's people with skin in the game who are interested in creating good systems that we can all learn from each other. And I want to build the next generation of automated options trading software because everything out there has way too many limitations. And I just feel like that whole sector is like 10 years behind where it should be. So you may have already seen it, but ATC is out. It's available. And the question is, how much is it? Well, I always like to frame it with like, you know, what did it really cost to build? So it really cost me over $25,000 and multiple years of like having to figure out a lot of this stuff myself because I, after spending $25,000, only got basic information about automation, and I was never given a good strategy from that. It was just all like, here's how to automate, here's how to write the code, here's, you know, here's different stock selection criteria. Like it told me all these things, but it didn't put it together and say like, here's a strategy. So you actually get a strategy like day one if you go fast enough, or day two. So that's very valuable. So yeah, I'm definitely not going to charge that much for this. And what we're doing for sticky trades, this is on sticky trades exclusively, but really like you're here seeing this and you're involved early on, probably because you're already a member or you've been a follower for a long time. We're going to do a significantly discounted rate from where our target is, which is up to 5 times this price. And then you can lock this in. So it's $9.99 for basically what on that list I showed you, items 1 through 10 is the $9.99, and then the ongoing like the small account stuff and the collab, the group mentoring, and all the ongoing strategies and reviews. That's in the $199 per month for the group mentoring. And then I just like to phrase this like, I want it priced so like obviously good that like the return on investment should be like silly and like laughable and like obvious. So the question like is if all this did was help you get out before one correction ever, if you can just go flat early in a correction, I'm not saying like catch the top and skip the whole correction. I'm saying like get out. You've seen the examples. Get out and stay out during a significant correction, and you'll have done it because you had automated systems running and doing that for you. Then this will have paid for itself probably many times over. And if it can help you get into just one more good trade each year, it probably will have paid for itself, including the membership, many times over. There are, I had NVIDIA on my list last year. Was it last year, 2 years ago, year and a half? It was over. That's right. Because I remember when I told somebody was a year ago. So it was actually a year and a half ago, I added NVIDIA to so almost 2 years ago, I added NVIDIA to my automation list just because it went through my symbol selection criteria. I did a study on it. It looked good. So I added it. And then it turned out to be one of my biggest wins of 2023 into early 2024. And like I had no clue. I didn't predict or know or do a fundamental analysis. It went through the system in the process and got me into one more good trade. And in that trade, that paid for all of my investments into all of this for myself. So it only takes one good exit, and one good trade to be highly rewarding in this. And I just want it priced where it's so obvious that it's really just a little like a ticket to get in. And then we start this community and we just really find even more great opportunities together and have fun. So founders rate, $9.99 to start, $199 a month. Ongoing, that price absolutely will go up probably in the near future. We don't have a set date for that. But the target really is the training will probably get to 5,000 over time, and the monthly will go up as well. So again, if you take that, it's the 199 is stuck for a lot as long as you stay in. That's your rate, no matter what anybody else is paying. And then the 999 is a one-time. So this is if you're like, okay, you told me all these things, I see what's there, there's some strategies, but like, how does it really work? So this is like the meta instructions on how to use ATC. So first, you just start by following the instructions exactly as given. Do every single thing I tell you to do, even if it doesn't make sense, because all I'm asking you to do is simulate or trade one share. Okay. So we're not talking about a lot of risk. Like I just want to get you to the end. Like I want you to go through all the motions first, and then you go back and fill in any blanks. All right. And you do that by attending live meetings, asking questions, and we'll fill in the blanks. Ask questions in the chat. So in the room, hopefully as we move, other traders will start to help you get questions answered faster. That's also the instruction. The next bullet point is to be a contributor. Being a contributor adds value to you. Okay, that's why I'm contributing to you. Some of the actually 80% of the trades I take right now were a system that a student of mine over 10 years ago made. And so I probably made half the strategy, and then he spent months working on like changes and stuff. And he was saying all these different things he was adding to it. And I'm like, that sounds kind of complicated. I don't know if that's necessary. And then we finally like went through it together, and I was like, this is great. And I've been trading it ever since. So contributing adds value to you and everyone else. It's a win-win. Bring your ideas to meetings. So if you're just like, hey, I found this indicator, or I saw this YouTube video about this indicator, or this stock, or this whatever, this pattern, whatever, bring it. And if you're like, I just don't know how to automate that, I don't know how to test it, then we'll do it live. And then you'll get the answer and everyone else will see it too. So bring your ideas, and then network inside and find people working on similar things as you. Maybe they're trying to build a certain list of symbols to trade, and that's what you're focused on, and that's what they're focused on, and then you can work on that together. So that adds a lot of value to what's going on. So common concerns may be, so I don't know tech. All right. I don't know like coding and data science and all this stuff. My answer has always been, and it has accurately come true, that if you have learned trading, you know everything you need to know. This training will not teach you the fundamentals of trading. We're not talking about bid and offer and short and long calls and puts, etc. We're not talking about any of the fundamental foundational pieces of knowledge about trading. That takes longer. That's harder to learn than this. Automating what you have learned about trading will be the easier part in hindsight. So you will be able to learn this. It's almost all point and click tools. If there's code, you literally, I guarantee you, in a very short period of time, you will be able to read and understand the code because it's the code is called easy language. It's literally written like natural language to give instructions, but you do have to just get it right. You got to put a semicolon here or something like that to make it work. But I'm giving you that code. You just copy and paste it, test it, simulate it, trade one share until you know, like, hey, yeah, it works the way it's supposed to work. And then you can go from there. You say I'm too busy. If you're too busy, that's exactly why you should automate. So if you're too busy, you're probably too busy to trade manually, or at least trade manually the way you should be. So the couple of weeks of part-time effort to put into this is going to relieve you of that, and you'll actually have more free time and get the trading results you're looking for. If you're too old, that's absolutely ridiculous. Some of the best quants in the world are grandpas, probably grandmas too. No offense there, just that's who I know of. And so it's like, that's just not true. Not that I'm saying you have to be a quant, but in fact, this is just most valuable for anyone more interested in taking it easy and not like staring at flashing screens all day. This is to your advantage. Account is too small. We will talk about the ability to use leverage, use options, use the data to get funding, etc. I'm not good at trading. If that's your issue, well, automation was one of the things that made me good. At least systems started off, and then automation made me actually a good risk reward trader. So I went from poor trading to positive trading through systems, but it was not good risk reward. And then I went from not good risk reward with positive results to good risk reward and sustainability through automation. So automation has made me better. I didn't have to be a good trader first. And I've never tried this before. It's designed for people who've never tried before. So quick goals, if you want to summarize down to like, what does the next like couple weeks look like? Your goal should be to be simulated, have a simulated automated trading system running 1 week after you sign up. And that's like a couple hours max a day. And that couple hours will fly by because you're learning something new and it's very fun. So within 1 week, have a simulated system running live. And then within 4 weeks, at the very smallest possible size that keeps you engaged and really feeling like it's happening, within 4 weeks that you have something live running. All right. So the way to get there is either type in this address directly, stickytrades.com/ATC, or there is, we'll do the questions in just a second. Or if you're on the website, you click Meet the Experts, and then Learn More under Me, and then Learn About ATC. Sure, we'll have one slightly faster way to get there in the future, or you just go directly to the address. A little video there just for fun. Just a little more explanation about what's there. Good interview with a trader. And then all the features, the things that are added with mentoring. So even though it's like, it sounds like it's just mentoring, well, we're going to cover quite a lot in the mentoring in addition. 4 traders I've worked with. These are sample equity curves from the RSI Plus system. All the different things. And there's a little tiny plus here, so you can read what's included in each of those things, etc. Okay, so then all of these little links should work. And then here's where you pick between if you just want to get the training or if you want to get the training plus the mentoring. And a really important thing here is the $199, you don't pay that today. That kicks in a month later. So you're going to come into the mentoring right away, but you don't pay the renewal fee until a month later. So if you're like, well, I want to do the course and then that, well, if you're going to do that, you just go and do this and it will wait a month to charge you. All right, I'm going to hop into the chat now. And just because I think it's valuable to make eye contact and talk with people, I'm just going to go to the camera. All right. Starting, I'm going to go with the chat first. Actually, I'm going to go to Q&A first because that's what was open. Okay. Can you provide the lists for Thinkorswim? Is that the watch lists? If you can clarify that in the chat or not. I just don't know what lists that would be. If it's the, let's see, we're 12 minutes in lists. So I'm not exactly sure what that question means. So if you can clarify, I'll answer that. Can I load your system in Thinkorswim on Schwab? So the with Schwab, you can automate options trades, and that comes near the end of the training. So the exact strategies I showed you cannot be automated there. They're not an automated automation platform, but they do connect with the automated options trading platform. And so you can do that. I do recommend, I have Thinkorswim, Schwab, etc. And that's where I do all of any manual trading that I do is done there. And all my automated trading is done at TradeStation. So I recommend you go ahead and separate the two and like keep doing what you do at Thinkorswim and do your automation at TradeStation. On TOS, the chart would be, oh, that's fun. Yes, you can make a portfolio like that. The issue is, Bobby, that the sizing was 85, 5, 5, and 5, and it was on hourly signals, so that would not work. It's not that I'm saying when all of those, like a combined portfolio symbol is above the 200, you buy it. It's that each individual one of those are traded separately. So you trade Qs on its own, you trade gold, TLT, GBTC separately. Each one's separate. But that is a fun trick. In fact, you can make it a really long formula, and you can say like Qs times 0.85 plus GLD times 0.05 plus TLT times 0.05 plus GBTC times 0.05. You can actually make a formula as a symbol, and you'll get that mapped out. It's pretty fun. You can do the same with options codes. You can get the cusset code and actually chart a vertical spread by taking one minus the other. So that's pretty fun too. Tom, RSI means relative strength index. It's a standard indicator. There's two versions of it, and the results are almost identical long term. There's Wilders versus the other version. Fidelity Active Trader Pro is not, and again, I believe the best solution to get the result where you can have automated trading of some things running within a few weeks is build that on TradeStation and then do everything else you're doing at Fidelity separately. Larry, yes, this is recorded and we're going to post it to be watched. Robert, when you're done traveling, so June should be fine. June should be fine. Worst case, Robert, just if you see there will be a warning. You know, we're not going to just like surprise you missed it. We're going to say, you know, hey, we're raising the price. Now's your chance. So if you see that, grab it, or if you see it a little late and you respond right away, you just say, hey, I was in the webinar and I asked, whatever. We'll make sure you get it. But if you see that it's going to go up, the easier thing to do would be just to buy the training first. I think the mentoring, I'll wait longer to make that go up. Just the course will go up. So you just buy the course and take it whenever you want because it's access forever. All right. I'm going to put, and I always remember this in Zoom, is I got to send the chat to everyone. Move my cord out of the way here. Andrew John Falde at stickytrades.com. All right. So in the chat, in theory, I think everyone should be able to see it, is my email at Sticky Trades. So if you have any additional questions, please send those in. I didn't see the follow-up on. Yeah. Oh, so Kelly, the preferred TradeStation is the broker-dealer and the software provider, which is very fun because the software is free. So if you open a brokerage account and fund it, the software is free. They used to charge for all the tools. You could be paying hundreds per month if you added on all the tools. And over the years, they lowered the price, and then they finally wiped it away and said, we just need people to use it so we get the trade volume. And that's how they make money. So that's what's going on there. All right. So I'm a big fan of not holding people. I know like people are dismissing. They're like, I'm not missing 1 second of this web meeting in case something important said. I'm gonna tell you what matters is go to stickytrades.com/ATC, sign up. I'll see you in the next live mentoring session. You have my email. If you have additional questions, andrew.falde@stickytrades.com, and you can send those there. But that's that. So I hope you enjoyed learning about Magenta, automation and the benefits there and what we're up to at ATC. And I hope to see you in there. All right. Thank you, everyone. And I will see you next time.